Hi guys, it's Stock Curry, and today we're going to talk about stocks that are oversold. These are stocks that have been beat down way too far that could double or triple over the next year. I've got half a dozen stock picks for you guys, so let's get into it. Okay, regarding our market news, we do have news that United Wholesale Mortgage has just announced that they plan to accept Bitcoin for mortgage payments. That's crazy, but it's awesome at the same time. So this is actually, I think, the very first company ever that is going to be accepting Bitcoin for mortgage payments. And of course, that caused the price of Bitcoin to rise again today. Now, regarding our high growth stocks, I know a lot of those have been beat down lately, but again, the story for today is oversold, meaning stocks that have been beat down too far and are ready to rebound. We have seen it where money continues to flow into these large cap blue chip companies. That is why we are seeing the Dow, the S&P continue to rise, continue to hit new all-time highs, while most of the high growth stocks that retail investors hold continue to drop and continue to go lower. Now, the thing I wanted to point out is, if you look at the Russell 2000, which is a little better gauge for small cap stocks, you're going to notice that that continues to drop. And eventually, sooner or later, the large money, the pension funds, the very large investors, and these huge institutions are going to realize that the large cap blue chip companies are overvalued, they're overbought, they are sitting at PEs around 30 when they should be at 15, and it is time to get rid of those, take profits, and to move the money elsewhere. And sooner or later, that money's going to move back into these small cap stocks. Now, I have stocks to talk to you today with PE ratios between 9 and 15, and these are small cap high growth stocks. These are not companies that are well-established blue chip companies that are just going to sit here and do very little for the next 15 years. These are companies that are growing massively with these little tiny PE ratios. So it's a huge advantage to buy now to take advantage of some massive run-ups. Just like we saw in March of 2020, there does come a point where stocks just become too oversold. They bottom out and they recover in this beautiful V-shaped pattern. So I do expect that on a lot of these high growth stocks. In fact, Tom Lee said not to rule out a massive rally in the next week. So why would the stock market rally next week? Why not this week? Well, the reason has a lot more to do with what's going on this week than anything to do with next week. And the reason is that this week, and specifically on Friday, is the monthly options expiration. And keep in mind that monthly options expiration, a lot of the call options, put options that you as a retail trader might buy are actually written and sold by market makers. So market makers don't want to lose money on these. They want these to expire worthless. And so market makers are going to do everything in their power to make sure that those options expire worthless, meaning they have to get the share price as close to neutral as possible, to where you have the most amount of calls and most amount of puts expiring out of the money. Now, they have a lot of ways of doing that, which retail traders have learned about over the past few months during their investigations into AMC. Retail traders have learned about failures to deliver, they've learned about dark pools, they learned about a lot of the different ways that market makers are able to manipulate the markets and keep a share price where they want it. And you're going to see on Friday, a lot of your stocks will settle like right at a particular price. They'll be like $145.00, and they'll stay there throughout the after hours. And it's really weird, and it happens because market makers are trying to get a stock to stay right at a particular price so both the calls and the puts are worthless. And so that's what's going on this week. Now, next week, it's all over. It's done. It's in the past. And so stocks can get back to the values that they should be at. And that's why people like Tom Lee think that we are going to have a major rally next week. So I hope we do. I hope we have a major rally next week. Obviously, this week has been a little bit difficult, but the good news is this week ends on Friday, so we can get back to making money on next week. All right, let's get into our individual stock picks. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment firms, and now I analyze stock picks on YouTube. Every day, I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, if you want more up-to-date information, you don't want to wait till these videos come out, there are two ways that you can get way more updated information. One is to follow me on Facebook and Twitter, especially Twitter, because I post updates throughout the day on both Facebook and Twitter, so you can get news and alerts a lot sooner. The second way is to join one of our two groups. I have a free group. It is a Facebook group. It's called We Profit Day and Night. And on there we talk stocks and I post updates, and a lot of people will post news and questions. And it's just a great community to learn about different stocks and to get help with your trades. But it's not always completely up to date. It does take me hours sometimes to actually approve posts. A better way, the best way by far, is to go join the Discord, because then you're getting help immediately. And not just help from me. There are over 20 analysts just like myself who help everybody on the Discord. In fact, there's over 6,000, almost 7,000 members on that Discord who take advantage of those 20 analysts. So if you want immediate help, you want day trading, you want the live trading, all of that stuff, then I recommend you go join the Discord. Now, Discord does have a small fee, and that's because all of those analysts, not me, but all the other analysts, they actually get paid. So they do have to charge a small monthly fee just so we can pay all the analysts. But once you join that, it is well worth it. There's a 7-day free trial, so you can check it out and cancel if you don't like it. All right. The last thing I ask is if you could help me out. If you like the videos and everything we're putting together, then if you would please hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock picks, I just want to remind everyone that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock picks. And first up is CRSR. This is Corsair Gaming. They're a hardware manufacturer for computer-based gaming and game streaming. Jeremy with financial education bought more CRSR today. CRSR is a profitable company and their PE ratio is down to 14.32. That is low for a company that is growing revenues by more than 50% per year. The RSI is at 25.47, which is oversold. Now, CRSR is oversold on both the fundamentals and the technicals. When those two line up, you can be confident in your play. I would be very comfortable buying CRSR here. I would also be comfortable buying LEAP call options here. Next up is DKNG. This is DraftKings. They're an online sports betting company. Stockmo reiterated that DKNG's NFT sales have been extremely successful. That is going to provide a lot more additional revenue for DKNG, which means DKNG should easily beat Q3 earnings. Stockmo thinks DKNG is going to rise higher than the average analyst price target of $69 due to this increased revenue. Technically, DKNG is neutral right now and is showing no signs of either bullishness or bearishness. Next up is JAZZ. This is Jazz Pharmaceuticals. I doubled down on JAZZ today. What I really like about JAZZ is that fundamentally this stock is doing great. They got their FDA approval and they beat earnings. The forward PE ratio is now all the way down to 9.07. So this is a great value stock at the current price. Pharmaceutical stocks have an average PE ratio of 24.1. JAZZ would have to more than triple in price to get back to the average PE ratio. Just based upon the PE ratio alone, JAZZ should be trading at $352 a share. So you can see just how significantly undervalued JAZZ is right now. And the technicals are showing severely oversold as well. The RSI remained oversold for the past 12 trading days in a row. That is very, very rare for any stock. The RSI is currently at 15.32, which is double the oversold limit. And the MACD is at negative 10.68. I cannot recall the last time I saw a MACD below negative 10. So technically, JAZZ is severely oversold. When you get a situation where the technicals line up with the fundamentals, that is gold. And that is why I doubled down today. Now, the average analyst one-year price target is $218. I think that is really conservative, but even with that low number, it still represents a 65% upside from Thursday's closing price. Now, you may be asking why JAZZ keeps dropping if the stock is so great. Well, all I can tell you is that looking at the order flow, money is flowing into this stock. Now, I know it doesn't make sense that money would be flowing in while the stock price goes down, but that's what happens when most of your trades are placed in the dark pools. It's market manipulation, just like we saw in AMC and a lot of other retail stocks. But unlike AMC, this stock is fundamentally undervalued by a lot. I think the market manipulation will subside next week after the monthly options expire. Now, there is another reason why JAZZ is dropping, and that is because there are a lot of insiders that are selling, and that is spooking investors. That said, I find it curious that the amount of the insider sells were almost all $193.236. That tells me that even though these are informative sells, that this is really based upon compensation and not something really wrong with the company. Now, with the way the stock price has been dropping, you may be wondering if JAZZ is heavily shorted. And the answer is not yet, but it is getting there. One thing I can see is that the days to cover are currently at 2.63, which means it's 2.63 times the average volume in order to cover all of the shorts. We also see that the short interest has gone up by 9.8% today, bringing us up to a total of 7.27%. So while the stock might not be as heavily shorted as a stock like AMC, it is definitely being shorted. So in the short term, JAZZ is obviously bearish, but I am long-term bullish on JAZZ, and I believe JAZZ is going to rebound back to the 300-day EMA just as fast as it dropped. I believe JAZZ will get back to $155 within the next month. That would be a mere 17% gain from Thursday's closing price, and that is nothing for a stock that has dropped 25% in the past month. Next up is PSFE. This is PaySafe. They're a payments platform focused on the gaming industry. StockMo said he is shocked that PSFE is all the way down to $8.06. PSFE is another stock that is oversold and due for a rebound soon. The RSI is at 26.48, which is below the 30 RSI oversold level. PSFE reported earnings recently, and they saw revenue rise 13% year over year. They also reported a net income of $6.6 million compared to a net loss of $15.9 million a year ago. The reason the stock dropped after earnings is because their Q3 guidance was below expectations. PSFE is now down 56% from highs a few months ago, and StockMo is considering opening a position for a long-term hold. The average analyst one-year price target is $14.75, which represents an 83% upside from Thursday's closing price. And next up is SKLZ. This is Skills, and they're an online gaming company. StockMo said he really likes SKLZ now that it is down 75% from the highs earlier this year. StockMo likes how SKLZ is at a 52-week low and yet has good chance of doing well in the long term. SKLZ reported earnings recently, and earnings were decent. They saw a 52% year-over-year growth in revenue. Unfortunately, earnings declined a little, and they continue to raise massive amounts of cash each quarter. So SKLZ has been beat down for that reason. That said, technically SKLZ is oversold. SKLZ broke below a long-standing level of support a few weeks ago. It is now at 22.98 on the RSI. Again, anything below 30 is considered oversold. This could still drop further though, so SKLZ is like trying to catch a falling knife. But once it does bottom out and start to rebound, SKLZ has a lot of upside potential. The average analyst 1-year price target is $19.67, which represents a 95% upside from Thursday's closing price. This is a stock that you could double your money on over the next year if you were to buy in now. Now, since nobody can perfectly time the bottom, the best way to play this would be to start dollar cost averaging in. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. ZipTrader reviewed TSLA today. He stressed that valuing TSLA based solely upon their EV sales is a big mistake. You have to look at their numerous other revenue streams, including solar, financing, energy storage, charging stations, and monthly EV service subscriptions. But even all of that combined does not get you to the valuations that we see on TSLA. In order to understand the high-priced TSLA demands, you have to understand their software and how they are a leader in autonomous driving. Nobody else has the amount of data on autonomous driving that TSLA has gathered by having hundreds of thousands of cars on the road sending them data. And the future is self-driving vehicles, which TSLA is very close to achieving. Robotaxis are going to revolutionize transportation because it is going to make services like Uber and Lyft much cheaper once the driver is removed. Now, in the short term, there are issues. We are still dealing with supply chain issues, including chip shortages. But once we get past this, the next 5 to 10 years should be very profitable for TSLA. Now, ZipTrader is very bullish long-term on TSLA. Now, we can actually use these short-term issues to buy TSLA at a discount. On the chart, I drew a long-term upward trend line that goes back 1.5 years. And you can see how even 1.5 years later, TSLA is still maintaining this long-term upward trend line. So now is actually a great price to buy in at because we are at the bottom of this upward trend line. I would not buy options on TSLA because the stock is maturing and the rate of growth is slowing. That means your options have a very low chance of expiring profitable. But just buying the stock and holding is a great idea right now. And the last stock we're going to talk about today is TTCF. This is Tattooed Chef. They are a plant-based foods company and a competitor to Beyond Meat. And unlike TSLA, which has maintained its long-term trend line, TTCF is actually below its long-term trend line. Jeremy with Financial Education said he bought more shares of TTCF today. TTCF is oversold on the RSI, so technically TTCF looks like it's very close to bottoming out and rebounding. TTCF is not profitable yet, so this is really a revenue play for now. That makes TTCF a lot riskier than the other stocks we've mentioned today, but it also gives you a lot more upside potential. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. And like I said, there is no better time to buy than right now at the bottom. Now, if you're not a US resident, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers has commission-free trading in the United States, and they have highly discounted trading throughout the rest of the world. Trades start at just $1 Canadian, 4 euros, or 6 Australian dollars, depending upon where you live. Now, both Webull and Interactive Brokers give you the full pre-market and after-hours trading from 4 a.m. until 8 p.m., and I do have material connections with both of those, so when you sign up for either one or both of them, using my link in the description below, not only are you going to get a great broker to trade with, you're also going to help me to continue to produce these great videos for you. And finally, I just want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you on Monday.